All right, folks, welcome to a trade recap. Today we were correct, but unfortunately, market stopped us out for that. Today we got fucked. I'm not gonna lie to you guys. Today the spread was crazy. I'm not. I'm never gonna enter a limit order again. I'm never going to exit a limit order, and I am gonna have a stop loss limit order because sometimes may not be in a chart, and the market may or might hit my stop loss and maybe lose more. And as you guys know, WD Gann said to never enter on limits, never exit on limits, always market price. But he did praise to have a limit stop loss order and to not change your stop losses, which that makes sense. But the the limit order one, that makes a bit more sense because the limit order entry fuck up your trade so fucking bad. I had a 6 pip difference of an entry today. 6 fucking pips. It's crazy. So I lost much more than is needed to. So from now on forward, all I'm gonna do is I'm gonna enter on I'm only gonna enter on market price, never on limit orders because they're literally built to do some fuckery shit. They're built to fuck you up. They're built to the market maker does not like winners, right? So although it did go on a loss, the point is to not lose more than we need to do, not lose more than what we're supposed to lose, right? If we're supposed to lose 1,000, we don't want to go to 1,300, right? We can go to 1,100 or 1,200, but not 1,300, right? That's losing a little too much. And in this case, you can see it did make us lose much more, which it is what it is. But as long as I can extract a lesson out of the trade, that's all that matters. Although we were right, Trump just spoke around here, said something about Iran. Eventually, he pushed that towards wrong located. I don't really care about the news. All I care about is the trade. And we did have a fairly swing trade here with the quality pair. If you go to the quality pair, GU pushed out the low, while EU did not. So we had an S&P divergence with the quality pair, and that right there delivered. And when he delivered, then when he delivered, the one we're supposed to enter did not deliver because what I'm saying, as you guys know, there's a quote that goes like this: enter before they enter, exit when they enter. And that is what the field swing model is. Basically, it's just a quick scalp. Not really a scalp, but if it goes against the long-term trend locator, it's gonna be a scalp. But if it doesn't go against the long-term trend locator, usually it never happens when it goes against the long-term trend locator. It does happen, but rarely. And if it does happen, it gives you a lot of RR. And today, if you can see right over here, that's what we had around here, right? You can see our entry was here, but we're supposed to enter around here. And eventually, the market went up here, right? It went up, hit a 5 around that trade, and eventually, so that's what happened. And when I entered this trade, not this trade went to a loss, but we're supposed to enter the Philly swing. All that said, I'm not gonna enter Philly swings. I'm only gonna enter I'm only gonna enter rejection block to the soups. But there's a catch, right? This is the only way how we can bypass the rejection block entries and enter Philly swing. I'm not gonna enter on the straight drop pattern. I'm only entering on Philly swings, the ones that soups it, or the one like if there's, as long as there's SMT, I don't care if my pair soups it or it doesn't. As long as there's SMT present with the quality pair, that's all I care about. Right? Then eventually that's gonna be a Philly swing and only rejection block entries, because those are the only two things I have. Because there's the Philly swing trade, the Philly swing model gives you that. It gives you that, you get in before they do, you exit when they do, right? You exit when they get in, you get in before they get in, right? So it's a very easy thing to do, right? This is right. This is the right model one, and this model one failed because he didn't give us the right model one. And this one delivered. So when we have the the 1 minute time frame, we do have to look for the model ones because it's 1 minute time frame. The stop losses are going to be outrageous, and you just increase your stop loss right? And eventually you're going for a 5 RR. So you could see before you go for a 5 RR here, fixed RR, and there's a 5 RR out of here. You could see you exited when they got in. People got in this from this breaker and it's from this model one. So you basically exited when they got in and you entered before they got in. So you have that edge, the edge over people, because what could happen is, I'll show you guys another example where this will happen. Market will give you that full swing 1 minute time frame entry. It will deliver, but when the bigger time frame, the 15-minute model, 150-minute breaker, or all of that, when the majority gets into the move, the majority can possibly get stopped out, and you could profit before the move makes you incorrect, right? Basically before it proves you wrong. So I can give you guys another example back in a chart, which was a old trader we had, which was a failure swing trade as well, that was looking to execute a trade on right around here, right? This one with this trade right over here, where SMT with GU and DXY. GU and DXY put out the low while EU did not. So there was a failure swing. There was a 5-minute number one on this trade. And all you're looking for, and there's a 1 minute one on this trade, and all you're looking for, and this, as you have a lower time frame range here, all you're looking for is the SMT be present, enter long, you enter before they enter, because they're entering around this breaker block, this auto block, this number one, they're entering on this fair value gap. So you enter before they do, you exit somewhere around here when they enter. So they're entering these breaker blocks, this number ones, this fair value gap. So you exit when they enter, and you enter before they you enter before they enter, you exit when they enter. So they enter these breaker blocks, this number one is fair value gap. So the majority are entering around here. This breaker, this fair value gap, this number one, and you're entering before they, right? So since they need to wait for the confirmation, you enter the trade just because of the SMT and the higher context narrative, all of that. You get in before they do. When they get the confirmation, that's when you get out. When you get the confirmation, when they come, the market pulls back around, gives you the right number one right over here. Or it gives you the model one entry, gives the fair value gap entry. This is when the majority is getting in. Guess what? When they get in, you're out, because the market gives you fixed 5 RR, because it's a 1 minute time frame. You want to go for a fixed 5 RR and get in, get out fast, right? Without wasting that, because it's overall. Because overall the trade could fail, right? As you guys know, nothing is ever guaranteed. You're never gonna have 100% win rate. So this could get you that quick scalp. Right? It could get you in, get you out right before the majority do. So even if the move fails, you're still gonna make money on it, right? There's gonna be a high chance of you making money on it. Usually, really high chance, because of when the majority here, if you go back over here where we are, right? The majority think this is a perfect long right here. The majority thinks this is a perfect trade to long up. This is a perfect opportunity because a big bullish candle on upside. It tells us clear sign to go up higher. So that right there is the majority, right? So you exit when the majority gets in, right? Which is right around here. Depending on when you enter, depending on your fixed RR. So that's the lesson of the day. So before we do that, let me give you guys a top-down answer to why we're looking for a long, right? On a higher time for overall bearish and long-term drawn liquidity, we had a weekly CRT here before this candle closed. We had a model one confirmation before this weekly candle closed. So this we have the CRT and our drawn liquidity overall this order block right around here. Right, this order block, weekly ERL back to IRL, as well as we have this daily. Now the daily time frame is bullish because short-term liquidity always paves the way to the long-term drawn liquidity. That short-term liquidity is our main focus, because we're entering in a 15-minute, sometimes 1 minute time frame. So we need to get that short-term drawn liquidity. We need to focus on short-term drawn liquidity way more than long-term drawn liquidity, because short-term liquidity go up, down, overall lead to long-term drawn liquidity, but the up, down gonna mess up with our position, because we're entering in a 5-minute and 15-minute and the 1 minute time frame. So on a daily time, with daily IRL to this ERL, how come this is from this daily IRL to this ERL and not this high right over here? It was because of the resistance block. As you guys know, before the market took out the resistance block, Before the market takes out the resistance block wick, market would tap the body, retrace, accumulate, eventually take out the, eventually take out the wick then, right? First tap the body, retraces, right, which it does right over here, eventually then take out the wick. So we go for this, daily IRL, this daily ERL, as though we have a daily steer to the upside. We have a midweek reversal, Wednesday low of the week. We have, that's we have in a higher time, now go to lower time frame. The market context and narrative, we have daily range, super low, super high, stable low, stable high, premium discount. When we're in discount daily range, we're in discount daily range. We want to go daily range high as well in discount, so we want to buy, as well as we have a New York continuation, and as well as we have a New York OTE. Addition had a CRT, real CRT low. We had a OT here, so we can only buy between the 0.50 to 0.86 price mark. And right over here, we had this fair value gap as our 4 key level, as well as we had this 4 CRT as our CRT. The 1 AM candle was our CRT. Now going down to a lower time frame for this execution, and this day we had a bearish order flow. We did not have any ranges here, but that was enough context for this bullish trade. Going down to the lower time frame for this execution, we did not, at the 1 AM low, we did not have the legit low, as well as we did not have the right time to purge of the low. So we're looking for the right time to purge, and we're looking for a value to get purged. The market had a low, which was not a legit low, so we're looking for this low to get purged. We're looking for a valid high or valid low to get formed. Valid low got formed. They're looking for the valid low to get purged again at the right time, which it does. And eventually, we're looking for that rejection block entry or failure swing entry. In this case, I promise you guys, when I was in the lower time frame, I was looking for that, failure swing entry in a 1 minute time frame. I was literally waiting for that, 1 minute model 1 to get tapped. Then, the reason I didn't long it up because, I didn't, I confirmed that it would be my rule. So I was like, okay, I'm not going to enter the trade because my rule says to not enter the trade. If my rule says not to enter the trade, I'm not going to enter the trade. Right, simple as that. Unless there's a lesson after the trade happens, or if it doesn't, then we can put this to the side afterward. Right, so I didn't enter the trade, the market moved, then eventually majority got in. So I thought, okay, when the market goes back down here, I'm going to set a limit order, enter there, stop loss here. The limit order fucked me up, so I'm no longer entering on limit orders. I'm only entering on execution market price orders. I am going to put my stop loss as limit order because I'm not gonna be in a chart all the day, right? So I need to put a stop loss limit order, but take profit doesn't need to be a limit order. But the entry needs to be market price, and the take profit needs to be a market price. The exit needs to be market price where I exit the market. So yeah, because the 6 pip spread is the difference on those spreads are crazy. Now that right there messes up my whole, on how much I'm supposed to lose. Now I lose much more than needed, right? Because my initial stop loss is supposed to be 2.5 pips. Now this was a 3.1 pip stop loss. That is a huge difference. That's a whole 6 pip difference right over there. So the lesson is overall to, number 1, I never ever from now on forward enter on limit orders. I never exit my trades on limit orders, because what I found out when I had my trade, which was a fixed RR, I see my trades, I make much less than what I'm supposed to actually make. I'm like, I'm supposed to be a 5 RR. Why am I making 4.45 RR? Why am I making 4.7 RR? Why isn't that 5 RR fixed? It's because of the limit order, right? The market makers is not like winners. So that's why that messed up. And yeah, the next lesson is to only enter on market prices. Never enter on limit orders. Never exit on limit orders. Always have market price entries. I can have a exit limit order for my stop loss. I can have a limit order on my stop loss. I can never have a take profit limit order or an entry limit order, because stop loss, I need to protect my profits. But my capital, I need to preserve my capital and protect my capital. But for the take profit, it's got to be market price, and my entry has to be market price. The next lesson is I will, from now on forward, the only 2 things I will trade is failure swings, which the failure swing must have a S&P divergent quality pair. The next time I can put, the next thing I could trade is the registration block only. Registration block, I could either enter a registration block after the right monogram confirmation, then enter the registration block. I can either do that, or I can do a failure swing entry with a total soup / SMT being present. So there must always be SMT present when I'm entering total soup, otherwise no. So this is a lesson of the day. Beautiful loss. See, we were correct. You know what I'm saying? But as I said before, the failure swing total soup model with the SMT, failure swing SMT total soup model, what that does is he makes you enter before the majority enters, and he makes you exit before the majority enters. So he makes you exit during the majority enters, right? So during when the majority enters, that's when you exit the market, right? It's a quick scalping model, which it could be long term as well if you're, if you have a high time and bounce correct, if you're advanced, which that's the goal. But yeah, this is overall the trade recap. Beautiful trade. We go to 1 minute time frame. We did have the right model 1 right over here. So we had SMT. I was looking for the right model 1. We had the right model 1. I get a big push out of the way. This is the reason why I was so interested on taking this trade, although I didn't execute because of discipline. Right? Although because the reason why I was so interested in the failure swing total soup model, because I was modeling the GU as well. I was like, man, this is a beautiful trade right over here. We have a aggressiveness to the key level, right, to our point of interest, as well as we have a consolidation, and we have an aggressive away from our key level, and we get a retest, and when we get an aggressive push back down to our key level, then we push out of it. That's beautiful, right? That's what everybody wants. You want a aggressive, speedy aggressiveness to your key level. You want it consolidating a little bit. Then you want aggressive and speedy out from your key level. So you want the market, to speed away from your key level aggressively, right? Just like this. And you want to market to tap your entry aggressively, which he does right over here, right? He did tap the trade, the entry aggressively before he pushes out. So this is the trade recap. Is a -1 RR loss, the 1.3 RR loss because of the more, and then let me order it fucked me up. So thank you for watching. If you guys like, comment, share, don't forget to down below, and I'll see you guys later. Peace out.